Exercise 3.3. A county engages in basic transactions. Okay, before I read this problem, how I envision this playing out is you have already answered the problem. You have my answers that I uploaded via Canvas, and you can use them to compare the two. You also have your textbook open as a resource, whether that's on the computer or an actual copy. And then, so this video is really just background noise as we compare our answers together and as we look at the examples provided in the textbook. Okay, exercise 3.3, a county engages in basic transactions. Kilbourne County engaged in the following transactions in summary form during its fiscal year. All amounts are in millions. You need not be concerned with the category of funds balances to which reserves for encumbrances are classified on the fund balance sheet. So that just simplifies it for us. And it says here, letter A, our first objective is prepare the journal entries. So, what do you think the first journal entry would be? Like we discussed in the introduction video, the budget is in a significant document. And that's how we start off our period to calculate the cost. So our first entry is going to be to establish the budget. And I provided two different pages to show a multiple entry or a compound entry. So when creating the budget, Kilbourne County is recording revenues anticipated and expenditures appropriated. And we must understand this word appropriated. This kind of, a synonym for this is authorized or approved. And in this scenario, we were told that the commissioners approved a budget for the current fiscal year. It included total revenues of $860 and total appropriations of $850. And when establishing the budget, it's kind of the reverse of what we're used to. So we're going to debit what we estimate our revenues to be, that $860, and then we're going to credit fund balance $860. And then we will debit fund balance for the $850 of the expected expenditures, and then we're going to credit appropriations for $850 to record the amount of cost we're allowed to incur during the period, approved to incur during the period. And that sets our budget. And then I do like also the instance of the compound entry, because this entry shows us that the fund balance, the origin of the fund balance, and that's the difference between the estimated revenues and the approved expenditures. It's just a plug number. And another example of the budgetary entry to establish it can be found on page 115 of our textbook. Then we can move on to the second thing that occurred during the period. And this is something that actually happened during the current period. It's not estimated values, it's not predictions, it's what actually occurred. And we see here, number 2, it as in Kilbourne County, ordered office supplies for $20. So when I was initially presented with this material, I read ordered office supplies and assumed this was an expenditure, right? But not quite yet. Since the supplies have not been received and just ordered, this transaction would be classified as an encumbrance. This is an indication that we have set aside money because we will have an expenditure in the future. And to quote our textbook, the reserve for encumbrances account is a balance sheet account. A commitment of fund balance. The encumbrance account, although most definitely not an expenditure, is similar to an expenditure. The encumbrance account to an expenditure so it's similar to an expenditure because it will have a year-end. In the year-end, any remaining balance is close to unassigned fund balance. So that's where we draw the similarity. I'll repeat that again because I had issues saying it the first time. The encumbrance account, although most definitely not an expenditure, is similar to an expenditure in that at year-end, any remaining balance is close to unassigned fund balance. The encumbrance account indicates that the net amount that was transferred during the period from an unassigned balance to fund balance that is assigned or committed. And that's found on page 118. And so the encumbrance is like an expense and the reserve is like the liability owed. So how we record this transaction is we debit encumbrance and we credit reserve for encumbrances to encumber $20 of the ordered office supplies. This entry to record the encumbrance reduces the budgeted amount available for expenditures as if the amount had already been spent, and concurrently designates a portion of what would otherwise be unassigned fund balance as committed or assigned for encumbrances. So the encumbrance account is utilized by governments and not-for-profits to prevent overspending. It's just an account to show we need to spend this money one day. We already told someone we are going to give them this money, so we shouldn't spend it right now, or we can't spend it from this point forward. And we can find another example of entity using an encumbrance account on page 118, and it's titled Encumbrance Cycle Year 1. Okay, now we can move on to transaction number 3. And this is showing us the county incurred the following costs and we paid cash immediately. So earlier you heard me mention expenditures. And the following costs are recorded as expenditures instead of expenses. Do you know why? Well, for now, my current knowledge, it's sufficient to note that expenditure, the term expenditure, is used in connection with funds that are accounted for on a modified accrual basis, whereas expenses is used in connection with those accounted for on a full accrual basis. And so that's why we're going to label these accounts as expenditures instead of what we're used to doing, expenses. And we learn on page 98 that the Governmental Accounting Standards Board requires that we list all of these line items separately. They advise that multiple classification of governmental expenditure data is important for both internal and external management control and accountability standpoints because it facilitates the aggregation and analysis of data in different ways for different purposes and in manners that cross fund and organization lines. Therefore, we must list these accounts separately. So we're going to debit salaries expenditure, debit repair expenditure, debit rent expenditure, debit utilities expenditure, debit other operating cost expenditure for all of those costs we've incurred. And then we're going to credit cash for the total of these costs, and it should equal $835. And these will all be separate line items on the income statement as well. So that's why it's imperative that we make this journal entry the way we do. And I apologize, I haven't learned all of the technology involved with uploading videos to Canvas, so I'm going to have to pause here and we can reconvene on transaction number 4.